Everyone, this is Si-Wing Yi from the Yi Real Estate Network, and my special guest is Mr. Richard Advani from Supreme Lending. He is a nation's leading investment loan agent, and he's been doing thousands of investment loans for investors over the past decade or longer. He also does primary home lending as well. So thank you very much for attending, Richard. You've been a great resource. So let's get to the bottom of this. So the headline, my title for this video is, have skyrocketing rents caught up with skyrocketing housing prices? Should real estate investors buy now or wait? So what is the cost of waiting? So before we go any further, I always love to provide this slide from a high level, all right? Because as an investment turnkey provider, my company and you yourself have, just many properties you have purchased in your portfolio. So, and you help investors buy, get financing for homes all over the country. So the big picture is rental property is history's most powerful and proven multi-dimensional real estate asset class, and also a very tax favor in investment as well, because of the multiple dimensions of it. We're not going to go over too much, just a few more seconds, because as a real estate investor, you're getting passive income, cash flow, you're getting depreciation, tax benefits, long-term equity growth, appreciation, and leverage, using financing to leverage your property. So the financing aspect is the amazing 30-year fixed rate mortgage, which is a hedge against inflation, even a hedge against recession. So once investors have this great 30-year fixed rate in place, I mean, everything is gravy afterwards. Now, the next slide, I'm going to ask Richard to give him some thought, because he knows what I'm talking about. So yeah, so as you can see, today's investor wins. Why? Here are the CPI inflation, which is at the recently is 9.1%, and the mortgage rate is between 5 and 6%. And then so go ahead, Richard. What are your share with the audience your thoughts about these three metrics?
Sorry, I think it's kind of funny, the CPI inflation rate of 9.1%. I mean, that's what the government's stating it is, right? But we all know it's much higher. Everything's gone up. You try going to grocery shop for two people for 3 days and you spend almost $200. Gas is up, everything's up. So first thing is, those statistics are nonsense, as we all know. But even if we take them at face value of 9.1%, as the slide rightfully shows, a lot of us people are angst about where mortgage rates are and think that they should wait to buy either a rental or a primary home. And even if we take the inflation at the 9.1% on the screen, and even if you get a mortgage rate at 6%, you're still at a 3.1% profit over and above inflation. And, that's kind of what people mean when they say a 30-year fixed mortgage is a good hedge against inflation. As the value of the dollar continues to drop, you're fixed in your interest rate for the duration of those 30 years. And, the real wealth builder is when you're in a period like you are right now, right? For people that don't own real estate, it's a scary period because inflation's rampant. You don't want to keep money in the bank, because if you do, the money will be worth less with inflation. So that, and people who've had real estate for 6 or 8 years, inflation's rampant right now, but we're celebrating because rents have gone up. Everything's gone up. But what hasn't gone up is our payment on the property. So our cash flows are doubling and tripling. And, you really start to see the wealth builder of real estate once you make it 6, 8, 10 years into owning a property. Because, even if you look at historic inflation rates, supposedly of, 2 to 3%, 10 years later, things are going to be 30% more expensive. Guess what? Guess what's not going to change? Your 30-year fixed mortgage payment. 30 years later, at a minimum, things are going to be 90% higher based on inflation rates, which means rents are going to probably double from where you started. But what's not going to change, once again? Your 30-year fixed mortgage payment. So, that is really the big takeaway from investing in real estate. And it is a slow game. I'm not saying you can't make tons of money in real estate over 2 or 3 years flipping and buying, but for most of us that are looking at this more passive, it is a long game. And the longer you're in it, the more the rewards kind of multiply.
Well, very well said. I mean, I think everybody listening to this presentation need to digest what you just said in relates to this particular slide. So thank you so much for your great perspective, as always. Now, here is a challenge. Okay, I see way too many investors out there recently. They are sitting on the sideline. So Richard, you and I mean, okay, let's numerically go through the cost of waiting as you see on this chart. I mean, waiting for the interest rate to come down, waiting for a real estate crash, correction, or a bubble before you buy your rental property. What if, let's paint this simple scenario. And real estate investors out there have about $100,000 for a down payment to potentially buy a rental property, sitting in a bank savings account, earning less than 1%. Again, as we discussed, the official inflation rate is 9.1%. The real inflation rate could be as high as 15%. So, Richard, as you can see, this money with the, let's go ahead, you pick it up. Yeah, I know what you're going to say is that you're going to have a very interesting perspective. So what are your thoughts in terms of cost of waiting based on this example I just shared?
Yeah, I mean, I like firstly that you put, the government inflation rate and the real inflation rate. I think the inflation rate you mentioned there is probably a little more what we are all feeling. But it's a good example. I mean, and it really quantifies things. If you have 100,000 in the bank at the start of this year, by the end of the year, based on inflation, the effectiveness of that 100 grand is really going to be 85 grand in terms of what you can buy with it. So yeah, sitting and waiting on the sidelines, regardless of the positive return you're making on the rental you're buying, waiting right now is costing you more than anything else. And I personally prefer to buy a property with $50 a month in cash flow and deploy money in the bank that's losing its value and still benefit from the long-term aspect of that real estate, right? You're paying down your balance, the hedge against inflation, the fact you're not going to lose money by keeping it in a bank account. And once again, the fact we covered earlier, which is, if you're looking 6, 8, 10 years from now, there's still nowhere safer to put your money right now than real estate. And, I think it was you that shared the Case-Shiller index with me that showed that from 1960 to current, through every recession and economic downturn, real estate's continued to go up, except for 2008, where, it was the mortgage wild west. And, the cause for the recession was real estate. And that was mortgage and real estate. And that was an anomaly because obviously, those bad habits that were in the lending industry are gone and micromanaged now by the federal government. So, real estate has proven to be a great long-term bet and a safe place to put your money, regardless of where we are in terms of the economy.
Absolutely agree. Thank you so much. Now, here is the next few slides. We will continue to validate what you and I are saying. Because of the skyrocketing of home prices, especially in the past 2 years, and the mortgage rate increase from whatever last year 3% to now 5 to mid 5% for primary home buyers. Now we're at a 40-year low in terms of home affordability. What does that mean? That means more people are renting than ever, but the problem is there's not enough homes to rent. There are bidding war for renting in many markets in the country. As a result, as you can see, the rents have been rising in double digit, triple digit, even higher depending on specific market. So as you can see, the trend of the past 2 years, of all the country. And in, like I said, in certain markets is even higher than 14%, which I'm going to show you right now. And I'm just using the Sun Belt, for example. Sun Belt, in the Southwest and Southeast of the United States, because of home affordability and relatively lower rent than other more expensive markets in the country. As you can see, one example here is the Sun Belt in Florida and in Texas. As you can see, this mind-boggling rental rate increases, which is amazing. And then the next slide also show the Florida is among the top in rising rents, which is amazing because of the for many reasons. People are renting more than ever before. We're becoming a renters nation, and the Florida and Texas is number one and number two, the fastest growing in terms of population and job growth and migration from people from other part of the country. So as you can see, mind-boggling rental increases, and people predict the rent's going to continue to increase as long as the inflation are at a double-digit level. So what does that mean? That means it's good for real estate investors. I'm just going to give you one sample of a property that right now the rents have not caught up. The rents is lagging the skyrocketing home prices. So therefore, right now, until the rent catches up, I mean, a typical $300,000 property, right now in Florida and Texas and a few other markets, rents about $2,200. If we put 25% down payment, getting a 6% mortgage interest rate, you still have a little bit of cash flow around a couple of $100, as you can see. But do not worry, because again, you're buying for the long term as an investor, because I'm not going to go over this 10-year projection, something Richard and I went over on our previous videos. You're not only buying for cash flow, you're buying for a multi-dimensional aspects of growth in the property, as we mentioned before, and this 10-year projection pretty much validate that. So at the bottom line is, then hold up, Richard, I'm gonna ask you to say a lot about this particular slide. So the action plan for real estate investors out there, as a matter of fact, Richard, I've been talking too much. You go ahead and address this particular slide, and we'll finish with this presentation in about a few minutes. Go ahead, Wood.
Yeah, absolutely. I need to obviously take a look at it. I haven't seen it before, but I'd say, the biggest thing obviously is get off the sidelines. And that kind of goes to that first point there, which is buy now, even at the current interest rate. As we discussed in the prior slides, regardless of where rates are, it's still way under inflation. And, if rates drop in the future, of course, you do have the opportunity to refinance to lower rates. And it also begs the question, where better of a place to put your money right now? Stock market's chaotic. Crypto's a roller coaster ride. The bond market's crazy. Real estate really is stable and going to remain stable, I think, for the long term, just once again, because of supply and demand. And, as you pull up on the screen, be fearful when others are greedy, and be greedy when others are fearful. Fearful, as Warren Buffett says, and now is a great example of that. So I would say, good action plan is to evaluate markets that are going to at least, break even on your money. Once you look at, of course, the other benefits, from the tax benefits to the pay down of your balance to the hedge against inflation, they still make for good investments. Typically, you're going to need to put 25% down in order to get a good interest rate and get overall good terms and enough cash flow. But yeah, like I said, get off the sidelines. I closed on a new construction property a couple of weeks ago myself. I'm continuing to buy because, there is no better time than now, because as we've seen on some of these slides, waiting is costing us money. So, I prefer not to lose my hard-earned money to inflation and Uncle Sam's fiscal policy, or lack of fiscal policy. I prefer to take some of that control into my own hands.
Yep, very well said. And my final takeaway is for investors. Everything you want out of life is on the other side of fear. F-E-A-R. My definition of fear is false evidence appearing real. Okay. With that said, that pretty much concludes this presentation. And thank you so much for listening. My name is Si-Wing Yi from the Yi Real Estate Network, and my co-host is Mr. Richard Advani from Supreme Lending. Thank you so much, Richard. Have a nice day.